Hey there, and welcome back to Crypto Corner. We've got some news for you today that's sure to catch your attention. Over the course of just 3 days, the world's 15 largest cryptocurrencies lost over $150 billion in market value. And it's all thanks to the crypto exchange platform FTX and its token FTT. As of November 6th, the value of FTT has been plummeting, losing more than 80% of its worth in just 72 hours. Let's dive into the details and see what this means for the crypto market as a whole. Stay tuned and make sure to hit the like, subscribe, and bell button while you're at it. But other than that, let's get started. Despite its early success, FTX troubles began to emerge in November 2021. The value of its native token FTT began to plummet, eventually losing over 80% of its value in just 3 days. This sudden crash in value triggered widespread concerns throughout the cryptocurrency industry, as FTX was widely seen as a major player in the space. So, what caused FTX's dramatic downfall? Many industry insiders have pointed to a number of factors, including issues related to the company's ownership structure, concerns over preferential treatment for Alameda Research, and the growing competition in the cryptocurrency exchange market. Firstly, there have been concerns around the relationship between FTX and Alameda Research. As we mentioned earlier, Sam Bankman Fried is the majority owner of both firms, which has raised suspicions among some industry players that Alameda Research may be receiving preferential treatment on FTX. While Bankman Fried has insisted that the two companies are separate entities, many remain skeptical. Another factor that may have contributed to FTX's decline is the growing competition in the cryptocurrency exchange market. In recent years, new exchanges have emerged and existing players have expanded their offerings, creating a crowded and increasingly competitive landscape. This has put pressure on FTX to continue innovating and differentiating itself from its competitors. Finally, it's worth noting that FTX troubles are not unique to the company. The cryptocurrency industry as a whole has been experiencing a period of volatility and uncertainty, with many tokens experiencing sharp drops in value in recent months. This broader market downturn has undoubtedly contributed to FTX's struggles. So, where does FTX go from here? Only time will tell. But the company's recent struggles serve as a reminder of the challenges facing even the biggest players in the cryptocurrency industry. As the market continues to evolve and mature, it's likely that we'll see further consolidation and competition among exchanges, with only the most innovative and adaptable companies surviving in the long run. FTX's fall from grace was a major shock to the cryptocurrency industry. Many experts believe that FTX was going to be a major player in the industry and compete with the likes of Binance. The CEO of FTX, Sam Bankman Fried, was a well known figure in the industry and was widely hailed as a savior of the crypto industry. Bankman Fried founded the quantitative trading firm Alameda Research in 2017 and later started FTX, an exchange platform for buying and selling cryptocurrencies. While FTX was growing in the industry, it often clashed with Binance, the world's largest crypto exchange by volume. Binance was an early investor in FTX, but as FTX grew rapidly, it became a substantial rival to Binance. As FTX grew, Bankman Fried's reputation as a crypto savior grew with it. When digital asset prices collapsed earlier this year, Bankman Fried bailed out firms, spending about $1 billion. However, this image did not last. On November 2nd, CoinDesk published a report based on a leaked Alameda balance sheet. According to the leaked data, Alameda claimed it had over $14 billion in assets at the end of June, but most of that was FTX tokens. Alameda CEO Caroline Ellison tweeted that the balance sheet wasn't complete. Caroline also said its financial institution is under control. The company is doing well. However, it seems like the market just didn't really buy that, and then traders continued to withdraw from FTX. Things escalated on November 6th when Binance said it would offload hundreds of millions of dollars of FTT. The announcement sparked mass withdrawals. That day, FTX processed $4 billion of transactions, many times the normal amount for a day. Some got backlogged, which sparked demand for more. By November 7th, that number ballooned to $6 billion. On the 8th, a day later, FTX finances were in crisis. Binance stepped in and said it would buy the company. It seemed like FTX might have solved its liquidity problem. But on the 9th, Binance backed out of the non-bidding acquisition. The next day, the Journal reported that FTX used money from customers to fund risky bets made by Alameda. This was a shocking revelation for many people in the industry because even though there had been a lot of speculation about FTX and Alameda Research being joined at the hip, nobody could have foreseen that Bankman-Fried was willing to transfer billions of customer funds at his crypto exchange to help his crypto trading firm. The fall of FTX has sent shockwaves through the cryptocurrency industry. Experts are still trying to figure out what went wrong and how it could have been prevented. The incident has also raised questions about the regulatory environment in the cryptocurrency industry. There are currently no regulations governing the industry, and incidents like this one show that there needs to be more oversight. As for FTX, it remains to be seen whether the company will be able to recover from this incident and regain the trust of its customers. The aftermath of the fall of FTX has left the cryptocurrency industry in shock and raised concerns about the lack of transparency and regulation in the sector. The investigation by the Securities and Exchange Commission and Justice Department into FTX has brought to light the risks associated with investing in cryptocurrency exchanges. The SEC and Justice Department scrutiny is not surprising given the lack of regulation and oversight in the crypto industry, which has become a haven for fraudsters and scammers. The collapse of FTX has also raised concerns about the lack of disclosure and transparency in the industry. FTX's business model, which involved borrowing against customers' money and trading against them, was not fully disclosed to its customers. This lack of transparency made it difficult for customers to make informed decisions about investing in FTX. The resignation of Bankman-Fried as CEO of the bankruptcy filing by FTX and Alameda have left many investors and traders feeling frustrated and desperate. The fallout from FTX collapse has led to calls for more transparency and regulation in the industry. Other companies in the industry have started touting their reserves and calling for greater transparency in the sector. The missing crypto funds, estimated to be worth over $370 million, have also raised concerns about the security of cryptocurrency exchanges. The missing funds have not been recovered, and the investigation into the hack is ongoing. The hack has highlighted the need for greater security measures in the cryptocurrency industry. The bankruptcy filing by FTX is also significant, as it estimated to be the largest crypto-related bankruptcy ever filed. The bankruptcy filing highlights the risks associated with investing in cryptocurrency exchanges, which are still largely unregulated and operate in a regulatory gray area. In conclusion, the fall of FTX has sent shockwaves through the cryptocurrency industry and highlighted the need for greater transparency and regulation in the sector. The investigation by the SEC and Justice Department, the missing crypto funds, and the bankruptcy filing by FTX have raised concerns about the security and stability of cryptocurrency exchanges. It is clear that the cryptocurrency industry needs to take steps to address these issues and improve transparency and regulation in order to gain the trust of investors and traders. We hope you found this video informative on the rise and fall of FTX, one seen as a survivor in a struggling market. From founder Sam Bankman-Fried's reputation as a savior of the cryptocurrency industry, to the controversy surrounding Alameda Research and FTX finances, to the investigations by the SEC and Justice Department. This is a story that has shocked the cryptocurrency industry. The fallout has led other companies to tout their reserves and call for more transparency in the industry. As of November 11th, FTX's estimation of their liabilities would make it the largest crypto-related bankruptcy ever filed. Stay tuned for more updates on this developing story and more crypto news on Crypto Corner. Don't forget to like, subscribe, and hit the bell icon to stay up to date with our latest videos.